All right, so we're in 2025, and a lot of people out there are searching the internet to try to find ways in which they can work from home, make money online, and maybe you are ready to take a even deeper dive into understanding and learning day trading. Okay, so maybe you want to make this a hobby of yours, and you're very passionate about it. I'm going to show you just a simple strategy and what I trade, but first and foremost, what you need to focus in on is that I trade off range charts, okay, or range bar charts. If you trade time-based charts, that's fine, ticker volume, but you're going to have to find your own edge because I don't have experience in trading those charts. And time-based are not comparable or comparable with range charts. All right, you're not going to find you may be able to find a happy medium, but what I'm trying to say is that say, for example, a 5-minute chart is not going to match up exactly with, a range chart. The reason why I trade range bar charts is because they just clean into the eye to me. I don't have to worry about, looking at all those wicks and areas that just kind of confuse me to the eye. I've been doing this and trading these charts since day one. But as a day trader, I'm going to show you a strategy that works day in and day out. Now, the key to this strategy is all about really being patient, okay? If you're a supply and demand trader, please take your time to go ahead and watch the entire video. But please, when you are getting into the mode and want to learn to understand day trading, do not expect to have overnight success. This comes with lots of time, experience, and the journey was long. But in time, the better that you perfect it, the more you're going to see, or the quicker you're going to start to see your profits start to grow. The key to all this is really compounding an account. And when you start to slowly take steps in compounding, then things really start to kind of snowball, right, in time. So grab a hold, grab pen and pad. Let's go ahead and get started right quick. I want to jump into this because I really want to kind of identify and dig a little bit deeper to those that may have questions about, okay, kind of which zone do I trade from when it comes to supply or demand. I'm going to show you a setup, surrounding a supply setup, and it's just in reverse of if you're looking for demand. The number one thing you need to focus in on is the overall structure from a higher base chart first. Again, let me say that one more time. The number one thing you need to focus in on is what is the overall direction looking at your higher base chart. As a trader, you want to focus in on top-down analysis. Higher base chart first, then your lower base chart to do what you take your entries from. Now, with the strategy and how I trade supply and demand, it's all about marking up a higher base zone first off of my 120 range chart, and then I like to scale down to a 24 range. Now you could kind of find your own happy medium or edge or niche using these charts. But this is what I'm comfortable trading with and what I have been trading with. Okay, so once I marked up my higher base chart zone, okay, identify that based on what the overall direction is according to structure of the market, then I'll move down to my lower base chart to find a lower base supply zone. In this case here, in the example I'm going to show, both of them they have to be high probability. What makes it high probability? People always ask me that. Is the imbalance or gap, same thing, back at the zone. Okay, on the candle that left to the downside, which we'll take a look at, was there an immediate pullback that filled in back to the zone? Okay, if not, and the market moves swiftly away from it, that lets me know that the banks, institutions, them, quote unquote, they were positioning to sell the market off fairly quick. So when there are imbalances resting at the zone, that's what piques my interest as a trader, because to me it's like the scraps left on the table in a sense, and we want to trade and grab the coattail of those institutions or banks and move with them, not move against them. We want to be able to identify their setup. So they have to fill in those imbalances back at a zone. And most times the reason for to fill in orders, okay, for one. Secondly, the imbalance resting back at the zone is a stopping point for me because I know that those imbalanced areas have to get filled in, and those are stopping points which they can react on, and that's where I like to take my scalp set, all right? So first, like I said, let's identify the structure of the market here. We can see the market has been doing what? Making lower lows and lower highs. If you are constantly breaking structure and making lower lows and lower highs to the downside, please do yourself the biggest favor. Look for shorts, not longs, okay? Or unless you have experience with counter trend trading and you see something in the market that is showing you a different direction, or the market is pivoting and starting to reverse to the upside, all right? But you have to know what's going on, and I talk about signs of reversal in the market, so please watch the videos, guys. Again, if you have questions or in particular to the strategy I'm talking about, please spend some time watching the video content, because I can almost assure you 99% of the questions 99.9% of the questions you have are going to be resting within one of the videos. All right. Yes, there's tons of them on there, but there's a purpose for that. Okay. I kind of go over the same strategy and over, maybe beating it to death. But I know we have newcomers that are always coming to the channel and subscribing, which is great because we're growing as a channel. But just as well, there's a lot of video content, and the reason why I do that is because some people have to see things multiple times, all right? And I guess my way of explaining it from time to time may be a little bit different, but I'm still centered in on one thing, the strategy as a whole. Breaking structure to the downside, pulling back to what? Key areas of supply. As long as we're moving lower, look to continue going short with the market, especially if you have a high probability zone, first and foremost, off your higher base chart. Where's the imbalance at? Look for the market to get back to it or pull back to it, retrace to it, and react at it. In this case, in point, in which I'm going to show you an example here, the market made a low here after breaking this area of structure. So it made a low, lower high, major structure break here, makes a new low, pulls back, breaking structure right here, breaking below this area here. This is what I like to classify as a slight breaking structure because there wasn't a full-on candle break to the downside. The wick of this candle here actually just kind of wicked it out. It is still considered a structure break. Now, the thing we want to look at when we have a structure break, okay, after we figure out the direction, is there on the retracement, is there an imbalance back at the zone? You see this candle, you see this last bullish candle to the upside, and then the candle that broke below it, this bearish candle here. Look on that bearish candle where it broke to the downside. After that candle there, which broke to the downside here, the very next candle, did it immediately pull back, and how much did it pull back up? Did it come back all the way to the bottom end of the wick of that bullish candle? No, it came back, but didn't fill in all the way back up. So it left a small gap there. There's a very tiny imbalance resting back there at the zone. So I'm going to mark the zone on the higher base chart. That is the starting point. The number one thing that we need to identify is the higher base zone. Once we've marked that off, then we just move down to the lower base chart, okay? You can do this each and every week to make money, to make profits in the market. Whether you trade 2 days a week or 5 days a week, it does not matter. This is how you're going to, find a way to strategically and logically make money each and every week, okay? Now, there's a bit of patience that takes place with this because we're waiting. The number one thing that a lot of people don't have is the patient part. They want to quickly get in. They want to scale down the lower time frame charts. They want to look for quick entry points to get in and get out the market. But the lower you start moving down into charts, guess what? The scalps are going to be quicker, going to be shorter, and the market can be reversing against you. You're not seeing it. It could be, you could get railroaded very quick. This is why I like to see mark up my higher base charts first and wait for them to patiently come back to that area. Okay, why? Because on a higher base chart, when they move away from the zone, more than likely when they get to it, they're going to react, and I can scalp off the lower base chart. Now, to finish out the rest of the strategy here is that once the market pulls back to the zone, I'm moving down to my lower base chart. Whatever your lower base chart is, that's where you want to scale down to. Let's move down to it right now. Now you see I'm on my 24 range chart. This is my executable position entry chart. Okay. All right, the bigger box is that box we marked up on the higher base chart, the 120 range, okay, or the 120R. The market retraces back to that area, okay? Well, it retraces back to the zone, okay? It taps the zone pretty much right here. Now, the thing I'm looking at here, a lot of people get confused. They ask many questions about this right here. What about this little zone, this little area of aggressive selling right here, the supply zone resting right here, okay? I'll mark it up real quick and move on right here. Okay, what about this right here? Okay, if the market came back into it, which it tapped it right here, right? If I drag it out more, it did. But you have to be very smart and understand also, if you have gaps resting above that first area of supply or demand, in this case here supply, you've got to think that they're more likely they're going to want to test those higher up areas, especially if they pull back this much here. Think logically, okay? So if they pull back that much, look, you still got gaps on this candle here and gaps on this candle here, back to the upside in which the market has to fill in. If they are pulling back fairly deep on the 24 range and they gotten this far, what makes you think that they're not going to come up here and finish filling this area here? Yes, there could have been maybe a little quick scout want to hit this right here. This is a fake out, what they love to do. They want to entice you to entice you to take the trade right here, give you a few points. Unless you close very quick, they came back and stopped you out because they were aiming for this area a little bit further up on the zone. We're still inside the 120 range zone. Now, once it's tapped into it, this is a high probability zone Y as well. There's a gap attached to it. There's a gap attached on this smaller candle right here in between the bottom end of wick of the bullish candle on the pullback right here. And then when this candle that broke down, the bearish candle that broke, The very next candle only came back this much. So there's a decent gap right here back to the upside. That's the imbalance. So now we've got a high probability zone on the 120R or 120 range chart, and a high probability zone because it's the imbalance on the 24 range or 24R chart just as well. All we're waiting on then is a break and close the candle, the break of the candle to the downside, and we get into the trade, right? So I'm going to get into the trade pretty much right here if I'm getting an aggressive at 21,151 or 152, or maybe down here at 21,150. Stop loss is going to go on the back end here at 21,158. Give, plus or minus, or I said plus or minus, but give yourself a few more points, breathing room above that. So wherever the market reacts at the 24 range, okay, and rejects it, that's going to be where you're going to place your stop on the back end at. The reason why I say give yourself maybe a couple points breathing room above it is because they love to come down and then retrace back and maybe wick that area out because they know sellers are stepping into the market right here. Okay, makes sense. What are you aiming for? We're aiming for basically gaps to be filled or areas of liquidity to be resting back to the downside. If I quickly look back at my higher base chart here, what I can see on the higher base chart, I always talk about once you get into a trade, or before you even get to the trade, figure out where you can take the trade back to. There is an imbalance resting on this candle right here, okay, or a gap, all right? This candle here that pushed up to the upside, the next candle that pushed up, okay, and then we got the formation somewhat of this, of this third candle here, which ended up being a bearish candle. It came back, but there was a small gap that needed to be filled on this candle right here, One candle, two candle, this started to be the third candle. The gap that needed to be filled was on this candle right here, okay, or the imbalance that needed to be filled coming back down. The reaction was right here, or the rejection was right here at 21,157. As you can see right here on the the lower base chart, right here, 157, 158. It reacts there. I'm looking for the market to come back down and fill at least the gap coming back down on this candle right here. So we're talking about back down here to at least 21,121. So again, what did I say? If you're aggressive, we're getting in here at 21,151. Maybe you're getting in here at 21,050, 150, okay? And you can take it on down to fill the gap, that first gap coming back down on the higher base chart, back down to what? 21,121, and it comes all the way down there, plus a couple more points right there. Even if you picked up the first 10, 15, and 20 points, you still did well, because on this one candle on the higher base chart, that one candle was from 146 all the way back down to 116. That's a 30-point move right there. So basically, simply put, on a 120 range chart, there's about 30 points within that one candle. So 30 points times 4, that's 120 ticks, okay? Just imagine just picking up some of the breadcrumbs, meaning 20 points of that right there, okay? 20 points, 4 ticks per point, that's 80 ticks you can pick up right there. This is how I do it each and every day, and you can do it the same to make money weekly and be able to become profitable. But the biggest part to it all, it's just the full rundown what I talked about in the strategy, but you got to be patient. Yes, that's the biggest thing. People always, Mike, how do you sit back and wait for so long for the market to come? I just wait patiently, okay? I mark up my zones accordingly. And you don't have to just 100% trade the NASDAQ. Maybe you could pair it with another chart, another instrument or contract, like gold or the ES. Look at some other contracts. Maybe nothing's setting up on this particular market. Then see if something's setting up across the board on another market, okay, that you could possibly take a trade from. Having multiple instruments to look ahead or look at is, smart just as well, all right? Because not every day there may be clear or good setups on one particular market. Then look at something else, all right? But this is how I do it each and every day. I just want to share this with you guys and break it down. If you're interested in getting like the trade breakdowns, which I post over on the Discord community, that's where I break down these trades that I do post in detail, so you can understand my mindset, the thought process, what I put into, what I was going through and looking at the market at the time, covering market structure, where to place stop loss, profit target areas, what I was looking for, what I was looking into, and what allowed me to make or pull the trigger for these trades, okay? So that you can understand the same type strategy, but take the similar type of trade setups and understand them on your own and practice with them. Again, if you're interested in becoming an elite channel member or supporter, the link is down in the description portion of the video. Scroll down to the description portion, right above the first link, which is the Discord. Discord's free to join. There's a link. Elite channel supporter, click on it, 2 tiers will pop up. Choose the second tier for a very inexpensive fee of only $6.99. a month. What are you doing there? You are supporting my efforts as not only a trader, but as a content creator to provide relative information that has helped so many people out finding that strategy and using something that they can become profitable with. Okay. Again, you can do this trading the micros, the E-minis, other markets, commodities, financials, whatever it may be, grains, meats, whatever it is that you are tied to in the future markets. Again, that link is down in the description portion of the video. And I appreciate all my supporters that have, supported me as an elite channel supporter. And this is where I give back. Tons of trade breakdown videos, the video playlist, as well as a great video covering market structure. But outside of that, that's all I have, and I want to talk about today on this Saturday into the weekend. Take care. I'll see everyone in the next video. But before you jump off, make sure if you're not a current subscriber to go ahead and sub by clicking the subscribe button down below. Turn your post notifications on by clicking the bell so you do not miss any other uploaded content here on the channel. And last but not least, if you found value in today's video, make sure before you get off to click that thumbs up, that like button. I greatly appreciate it. It helps get the valuable information and content here out to where it needs to go to people who are looking for the same information as you are currently watching right now. Take care and have a blessed weekend.